Hello, and good morning, guys. It's a beautiful Monday morning. Not Monday. Sorry. Yeah, I'm daydreaming. Yeah, it's a beautiful Thursday morning. Today is the 20th day of August, 2026, and this is a recap of what we had yesterday. We were looking for potential sales below this level here. We never got a confirmation at all triggered for the sales. For the buys, we were looking for potential buys above this level here. We are looking for the potential buys above this level here. You can see this level was this was a very strong level here. You can see the rejection. We got how many candles did reject? We got one, two, three, four. We got four candles rejected. So I knew once you have this break, once I saw this, I knew uh, this level would not hold so, much longer. After I saw this four candles trying to break above, getting rejected. First candle, strong rejection. Second candle, a weaker rejection. Third candle, a weaker one. Then the fourth candle, almost no rejection. Very small rejection here. This gave me the confidence that once we get this break above here, the push is gonna be, we're gonna have a very big push up. Okay, so this is what happened. This candle opened here, pushed down, got rejected, pushed up with very good bullish momentum. Closed all the way up here, almost no wick, signifying that we had no sellers trying to push the market down here. The sellers that were trying to push the market down here were not that strong. So this signified that the market would continue pushing up. We had some good bullish pressure. So this was a perfect entry here. This was a good entry here. Stop loss just below this structure that was broken. You could have placed your stop loss below this structure that was broken, or even below this wick of the candle that broke above here. You could have even placed your stop loss here below this wick here. Would have been a very good area to place your wick. You can see the risk to reward ratio crazy 21. But for me, I got in with a risk reward ratio of 6 points. It was around 6.5 thereabout. Okay, so once you got activated, you can see the market pushed up, broke above the London high. This was the London high, pushed up with a very strong momentum, very strong bullish momentum, hitting our TP1, 2, and 3, all in one, all in one candle. Okay, all this happened in one candle. Boom, TP1, TP2, TP3, all hit in one candle. So this was where I got out. Then this happened. I was expecting price would be rejected on this level here, but once I saw this candle opened here, pushed down, got rejected by the buyers. The buyers pushed the market up, with some good bullish momentum. Sellers tried to push the market down. They were not that strong that strong. So the bullish momentum was still there. We still had the bullish momentum in play, strong bullish momentum. So once this happened, closed above our level. Remember this yellow line here. This was our 4-hour high. This was the week on the 4-hour high. So once I saw that the week has been broken with this very strong momentum, then I waited for a rejection, retest, not a rejection. I waited for a retest and rejection, which we got. You can see this 30-minute candle, this candle that opened at 4:30 and closed at 5 p.m. Got rejected. So after the rejection, you can switch down to 15 minutes and see. You see, this is the candle that opened at 4:30 This is a candle that opened at 4:30. Good. Yeah, this is a candle that opened at 4:30. This candle opened at 4 p.m. This is a candle that broke above our level. 4 p.m. Closed above our level here. Then we got this retest. There's this retest, rejection. This would have been a very good entry here. Yeah. Uh, Place your buy limit here. Stop loss just below the wick that got rejected here. Below this wick that got rejected here. Then target 45.15. Yeah. And you see, boom, TP hit. Just like that. Why? We had this signal here. This candle was our signal here. Very good bullish momentum, closing above our level, above the wick. Remember, this was the wick of the 4-hour high. This was the wick of the 4-hour high. Closed above our level with good bearish momentum. We got a retest and rejection. Once we had this rejection, this would have been a very good entry here. Stop loss just below this wick here. Target 45.15, and we hit that TP. Boom, at what time? At 11:15 p.m. TP hit. So you see, yesterday was a very good day to trade. Yesterday was a very good day to trade gold. These were two entries you would have taken. Very good entries, very, very small stop loss. You can see a stop loss, very minimal stop loss, a very small stop loss, a very small stop loss. And the target, the risk to reward, 6.4. And this one carried a risk to reward of 8.3. So yesterday was a very good day. If you didn't catch this move yesterday, I don't know what you're trading on gold. So yesterday was a very good trading day. So far, we've executed 5 trades on gold, following this uh, following this strategy. We have executed only 5 trades. The entire since 1st of August to date, we've executed 5 trades, and out of the 5, we've won 4. We have had 4 wins, and we've had 1 break even. One trade closed at break even, and four wins. 4 trades that hit our TP. So it's been, I can't say it's been a bad month. It's been a good month. So the market has been a bit volatile, and this August, the market has been really volatile this month. But we got that move. We got that move, and we would have added another trade here, pushed the market up here. So that was a very good day. Okay, so let's see what we have today. Let's let's look at the fundamentals, then jump into our analysis for the day. So today we are looking at today is Thursday. Let's see what we have today. Thursday, we had some high impact data on the Australian dollar. That was the employment change and the unemployment rate. Then nothing high impact, nothing. Then we have some medium impact data on the USD. This is the Philly Fed Manufacturing Index and the unemployment claims. Okay, that's coming in at 3:30 p.m. Apart from that, this medium impact data coming out, we have nothing else to expect fundamentally. But I always say keep an eye out for any breaking news uh, that are affecting the USD, especially if you're trading gold. Any breaking news affecting the USD or affecting the conflict between the US and Iran, that will definitely cause some volatility and in the market. Okay, so watch out for that, because you can see yesterday we had this news coming out, this breaking news coming out. Let me show you. There's some high impact breaking news that came out at 3:30, I believe. There's some very high impact news. That caused that spike up. You can see all these are breaking news. I believe this is the news here. I'm trying to look at that. Yes, here. This was the breaking news. This one, it came out at around 17 hours ago. It was around this time that we had this push up, this spike. This was around 3:30. Yes, it came. This news dropped at 3:30 p.m. This is what caused this spike here. This is what caused this volatility and bullish spike in price here. This news here, this breaking news here. The US Department of Treasury is increasing by at least double the size of the liquidity support buyback operations for longer dated nominal. You can go through it on your own. It's there on Forex Factory. So it came out at it was around 3:33 p.m. You can see here, and this is what caused this spike. You can see this spike in price, and the strong bullish momentum was fueled by this news here. Remember, this was high impact breaking news. We had not planned for it. It just dropped out of nowhere. Just dropped and caused the high spike in the bullish spike in price and the volatility. That's why we closed our. That's why we hit our TP1, TP2, and TP3 all in one 30-minute candle. These two, these two candles form one 30-minute candle. Okay, so watch out for any breaking news when you're out there trading. Don't get caught on the wrong side of the market. Okay, so real quick, let's look at what the market will give us today. We're gonna remove everything here. Remove the drawings, and we start a fresh new analysis on the 1 month. We identify our level of resistance. That's our level of resistance, and our level of support down here. Jump to the weekly. Let me try to be quick. Time has really gone. On the weekly, we have our support down here, and then the resistance is up here. You can see price is almost. Remember, I always tell you this levels here, this levels here, this resistance and the support, this liquidity up here above here. That's why it acts as as a magnet to price. Price is attracted to these liquidities above here. Okay, so on the daily, we are looking at this level here as a support. We had this break of structure here, so this is our daily support, and the daily resistance is up here. You can see the momentum. This kind of pushed up the momentum on this candle. It closed with almost no wick. The wick is very small. That's our resistance there. That's our daily resistance. Jump down to 4 hours. On 4 hours, this is what you are looking at. Now on 4 hours, we had this break of structure here. There's this break of structure here, but we had this internal break of structure here. So I'll go with this internal structure there. We had a break of structure there. So our 4 hour resistance is there, and our 4 hour support is down here. That's our 4 hour support, 4 hour resistance. Remember what you do when you get to 4 hours. We move this one to the wick there. Identify this wick. identify that wick there. Same thing on this side, on the buy side. The wick and the body are almost at the same level. So identify that wick there. So these are 4 hour range. This is the range you're operating within in the on the 4 hour time frame. We jump down to 1 hour. Now on 1 hour, we are looking at this structure here. We had a break of structure here on 1 hour, leaving this our support here. 1 hour support, and then the 1 hour resistance. You can do away with these levels here now. This is our 1 hour resistance up here. Okay. One hour support, 1 hour resistance. We're down to 30 minutes. And on 30 minutes, we are focused on the same levels here. 30 minutes support, 30 minute support, 30 minute resistance. And here, in here, we have a structure here that was broken. We had a support here that was broken by this 8 a.m. candle. You can see that. We had a structure that was broken by the 8 a.m. candle. This would have been a very good, this would have been a good entry, a high risk entry. You just move this onto the body there and identify this week as a high risk entry here. High risk cells below. For the safe cells, these will be taking a safe cells from here. Identify that level there. Potential cells below that level. For the buys, let me zoom in. We're almost out of time. We have a minute to go, a minute or so. For the buys, we are looking at this here. For the safe buys, we're looking at this level here. Potential buys above. These are the safe buys. So if you get a buy, a long position, from here, push it to this level here. For the sells, from here, you could push it to this level here. The origin of yesterday's move here. Target this, and you're good to go. That was it, the origin of yesterday's move. So this is what I'll be looking to trade today. Remember, guys, apply proper risk management and trade what you see, not what you think. And remember, this is not financial advice to trade. Do your own research before executing any trade, and always trade responsibly. So this is what I'll be looking at. For those with a high risk appetite, you could take this trade from here and hopefully push it down to these levels here. But for those with a conservative approach, this is the safest buy, safest sell, and the safest buy up here. I'm out, guys. See you tomorrow for a recap on the